So welcome to another property market update. This September's market update where I study all the other leading commentators of the property market updates. Well, my favourites anyway in the property market updates. People like Ranjan, people like Rick Gannon, people like Rob and Rob from the Property Hub, people like The Anxious Investor, people like Tony Law, Your First Properties. And I accumulate their information alongside all the other information that I've gathered myself into my own views and share with you in one place. This month, what we're going to be covering is we're going to be covering the property prices in the UK. Of course, it's the property market update, so we can't avoid covering the price changes. We're going to be covering rent controls being introduced into the UK. We're going to be covering the possessions being up double, possession orders, and cover repossessions being up 100%. We're going to cover HMOs and the changes that's coming into the HMO licensing space, and we're going to give you the predictions on property market crash, which we're all waiting for. I'd love to hear in the comments what your views are around this. But in the meantime, if you haven't already, I think now is the time for you to press subscribe, hit that bell icon, and don't forget to share this, because this is probably one of the best best momentums I'm getting with my videos. But Facebook is a tough algorithm to crack, so if you're truly enjoying these, my why is to live on my own terms, and my mission is to help as many people live on their own terms using property and financial education as a tool for that. So let's please help me with that mission and share this out to as many people as possible, like now, and I mean now. So let's look at property prices. We see for the first time a 0.6% price reduction, but this is still up 2.1% year on year. Some of the reasons behind this could be explained to summer months are always notoriously slow in the property market, purely because loads of parents are holidaying. So you have a holiday in, kids are for school, and people's last thoughts at holiday times, especially 6 weeks holidays and Christmas holidays, is to be moving home. So it's notoriously slow. But we've also got the ends to the furlough scheme, the ends to stamp duty coming up, which might be explaining a little bit towards this. But although when we get to the property predictions, I'm going to cover that a little bit more from what some people's predictions are around this, stating that these are not the reasons behind the boom. Who knows? None of us have got a crystal ball exactly what's going to happen, but it definitely slowed a little bit. Do I think it continues to slow? No, I think these summer months have slowed off. I think we are going to get a cooling a little bit, but I still can see foreseen growth going on, purely because of quantitative easing, purely because of government stimulus. But again, we'll touch on that a little bit more in a little while. See, one of the main reasons I feel we're still getting property, we're going to have growth going forward, is the supply and demand of properties. So basically, stock levels are 24% down year on year since last August. It's slightly replenishing a little bit, but they're still woefully down compared to what they are. So there's a massive supply and demand issue that's pushing the prices up outside from stamp duty. It's not just a supply and demand of the property stock, which is a massive thing towards this. A massive thing towards this is the supply and demand of mortgages and availability of money. So the more you get supply of money, the more willing the banks are to lend, the more that you get a forcing up of the values of assets. And banks are really keen to lend at the moment. There's some record low interest rates. So Halifax has just bought out a 60% loan to value 2-year fix at 0.83%. This is on a residential mortgage, but a large part of the market is fueled by residential mortgages. And they bought out a 5-year fix at 0.98%, so under 1% mortgage rates. Usually the residential mortgage rates get followed up by the investor mortgage rates after that. So you can expect the investment mortgage rates to slowly start coming back down again, because they spiked up a little bit last year after all the uncertainty with the pandemic. Average house prices are all-time record high at 263k, so we're still seeing massive pressure upwards in the direction of the prices of the average homes. And the best performing regions have been Wales, the northwest, the southwest, some of the home counties, because a lot of people exodus in London. Pretty much every region apart from, not pretty much every region apart from London has performed really well over this last year. London has only performed a 1% rise, which is quite a lot when you look at the prices of properties in London. But I feel, I've talked about this many times before, London's so far in front with the price per earnings ratio and comparable to people's like the household earnings comparable to the price of the property, it's hard for them to move on. And with furlough and all these schemes kicking in, that's just been widened massively because a lot more people are happy to move out of London, and that commuting belt is widening than it's ever been. For me, this is an indicator for the rest of the country. London, if London stalled here, the rest of the country is going to carry on growing to a cap point, because if it becomes more expensive to live in other parts of the country than it does London, then people will be moving back to London, because it is our heritage. It is a world famous city, and it is a fantastic city. I'm super proud of being a Londoner and being born in London. Although I will say the facts about, I don't believe London's got much more growth left in it, but it don't hide the fact that I love London and I was born there, and super proud of that. Scotland has introduced rent controls, which say they are not allowing rents to be more than 25% of a household income. I feel in most parts of Scotland it's not going to have a major impact, because the rental market in comparison to the earnings is fairly low. I feel in lots of parts of the UK it's not going to have an impact if the UK followed suit, well, not UK, if England followed suit, sorry, of Scotland with this. But it could be a benchmark, and there's lots of talk with London and rent controls, with the voting of the mayor and everything through this last year. So could this be a benchmark, and as it rolls out, could it get momentum? Although Scotland has tried other schemes that haven't got momentum, so only time will tell to see which direction this goes in. For me, I'm in the northeast again, where the earnings ratio is in line with the rents and purchase price ratios, so I'm not too bothered about it for myself. But in areas like the properties in the south, it could become a little bit more trickier. Since the eviction ban has ended, possession orders have doubled from 3,000 to 7,000. Repossessions are up 100%. Sounds a lot, but they was at zero during the pandemic, and they've gone up to 1,500. But both of these are a long way behind what they was pre-COVID, which is good news, I feel, especially for the possession orders with tenants kicking tenants out. No landlords want to possess properties back and kick tenants out. We just want tenants that are paying. And also, I think it's good news for tenants, because obviously tenants must be now taking rents much more responsibly and renting properties at a price that's much more affordable to them. I think this is a shake-up of the market, which is forced that because a lot more landlords are properly referencing their tenants now, so it's much harder for tenants to slip through and get properties that are unaffordable to them, which I think is just a win-win in all cases. Repossession, again, I don't like to see anybody losing their homes, but there's no hiding the fact that a lot of deals get done by property investors by repossessions, myself included. I'd say I've never measured this metric exactly, but I'd say a good 25, maybe 30% of properties that I've bought, and I've done close to probably 90 deals now, have been repossessions. I do not like the repossession order, firstly because I don't like people having their homes repossessed, but once they're repossessed, there's nothing you can do about that at that stage. But secondly, just the way the system works, where you have to put a bid on it and it goes to public notice, where they put a public notice on Rightmove saying somebody's offered this much. If you've got a deal at that price, then somebody else can offer against that. It quite often triggers somebody to say, oh, they've bought it for that much, I'd have paid more than that, and they can offer on it all the way up to the exchange of contracts, which I think is slightly wrong. I think they should be able to offer on it until you've instructed solicitors and paid for searches, and at that stage be off. But I can't reform that, and as much moaning as I like is not gonna change that, so you just have to live with it. I don't like the system, but you can't hide the fact that a lot of these deals are deals for investors to have, and over the last year they've been out of the market, which has put an increasing pressure on finding deals, because we've not got these to be purchase also. HMO licensing reform or changes happened from the end of August, and this is going to take properties, before the amount of licensable properties was only around 300, it's going to take them up to 9,000. So there's going to be a massive increase in properties that are now going to be eligible for HMO licensing, and that is now over 3 households sharing together. Before, it used to be a higher threshold. So it's going to be a massive change to the HMO market, and especially the lower end ones. Small HMOs would never been a great. Ideally, you want HMOs that got over 5 properties, because usually the first 5 rooms, pardon me, because the first 3 rooms usually pay for all the running costs, and room 4 and 5 are profit. So then if you've got 5 empty, you've got 4 still pushing the profit forward. Where if you're on 4 or even 3, it sometimes can make that really tight. So with a licensing added to that, to the bottom line, that could be really, really instrumental on forcing some smaller HMOs out from this space, but then potentially bringing these, especially with older landlords and tired landlords, bringing these properties back to the market for potentially to be bought. So I would encourage you to get on your HMO registers as soon as this happens, because people are going to have to be licensed, and try and get on your HMO register. Even if you find HMOs from landlords that are not already existing registered with these smaller HMOs that they've got, they might have bigger HMOs and some smaller ones, and they might actually come to you and say, if you send them direct to vendor letters, because you can get the register from the council under the Public Freedom of Information Act, if you start marketing towards them, some of these might have some of these small ones that no longer want to keep them when they come into a licensable state. One of my students on my coaching programs has just sent out a letter to a landlord, similar, not to do with the smaller HMOs, although he has got a few smaller HMOs, and he's just said to him he's got 5 that he wants to offload and is potentially going to give them to him on a lease option. So sending out these letters is a great way to reach out, especially to the older generation of landlords that do not want to come through these changes of regulations and extra funds that it costs and extra money that it costs to apply and meet these regulations. So could be a really good opportunity in this. Every upside will always have a downside, and every up or downside, wherever there's change, there's always massive amounts of opportunity. So always remember that it can be a bit of a pain, but it will always create opportunity. So let's talk about the end of the government stimulus, and let's talk about the predictions on the property market, and is it going to crash? So furlough schemes ending, stamp duties ending, but there has been a number of reports from a few different sources stating that stamp duty was not the stimulus behind the property market growth. A number of places are reporting that the reason behind the growth has been a number of factors, from things like accidental savers. So because everybody was locked down last year, people wasn't going on holiday, people wasn't eating out, people wasn't commuting, so they saved more money, combined with the fact of lifestyle choices and the fact that more people can work from home. So we're getting that commuter belt widening, as I mentioned earlier on. Again, I mentioned about the supply and demand. So the supply of properties is low, at all-time low, as I mentioned earlier on, but also the supply of money's been very good, as in the banks are lending well, and interest rates, as I mentioned earlier on, is at a record low. So a lot of top commentators in property space are saying it's not because of stamp duty. I think stamp duty is added to this, but I think a number of things with the stimulus, the money supply, and all them things I've mentioned already as just being a perfect sort of cauldron pot of ingredients that's made this property market boom on and push forward. So when will the next crash happen? The Telegraph has predicted that by the end of 2022, we're going to have a dip of 0.2%. But bearing in mind, the Telegraph predicted that we was going to have a 13% dip by the end of this year. So they was woefully wrong. And I'm surprised that they're even sticking their head above the parapet, talking about dips, without even mentioning how far they got it wrong previously. I'm going to give you my opinion around this, but I will state that none of us have got a crystal ball. It's just my opinion. And my opinion is, I can see it continuing to slow. Although August had a slight dip, I think we're still going to see some growth, but there's going to be a slowdown in that growth as the stockpiles slowly replenish a bit more, and as the life goes back to a bit more normality, people go on holiday, spending money elsewhere, the actual pent-up demand factors, or people sitting indoors, and a lot of people have done these moves. The people that want to move and get bigger space, and a lot of them have done this move. So I feel we've still got plenty of growth. I feel there's lots of stimulus from the government still going to filter through, but I feel it is going to keep on continuously slowing down. Will it last a year? Will it last 2 years? I'll be totally honest, I'm not sure. I wouldn't be surprised if it lasted another couple of years. But again, I wouldn't be surprised if it lasted a year either. And I wouldn't be surprised if we fell off a cliff in no time. There's lots of artificial inflationary factors that's gone into the marketplace with the amount of money that's been printed and forced into the market, and the amount of debt, household debt there is in comparison to the wages and in history they've ever been. We are definitely in some sort of bubble. Whether this bubble is going to correct in a year, 10 years, 20 years, nobody knows. Warren Buffett says this: nobody can predict the markets, and nobody can time the market, but how you beat the market is time in the market. So for me, my recommendation is always be out there buying properties. You can buy properties in up markets, down markets, as long as you buy correctly for significant cash flow, making sure you've got downside protection. What I mean by this is, if there's interest rate rises, is it still protected? Do you still earn money? If the property market goes down slightly, are you still getting cash flow? So invest for cash flow and invest in any time, because there's a massive opportunity cost if you just sit on your hands doing nothing. And the biggest benefit, I've mentioned this loads of times, but repetition is the mother of all learning. The biggest benefit you'll get from being out there, being active, trying to acquire properties, is the network you're building in the meantime. Even if you don't buy a property, equally what's worth a property to you is your network. So the more you're out there active, trying to deal with agents, trying to deal with direct to vendors, the more you're going to be on their mind. And most deals from agents or vendors come from people that's built rapport with these people. So you could be sending out letters to vendors, you could be sending out email, you could be sending out Facebook campaigns directly to vendors, and they might not want to sell yet because they might be over ambitious with the pricing that they want, but the market might drop at one point. If you've kept a contact with them and kept them rapport building points, or equally with agents, if you've built them rapports up, even if you buy nothing between now and 6 months or a year, if you've kept them lines of communications open with vendors and agents, there'll be a trickle through that pays you back in massive dividends in the future. So my advice is be out there trying to make things happen. I've got 4 deals in legals at the moment, and we're still getting stuff happening. We've not got as many deals in legals as I would like. We've not done as many deals as I'd like this year, but if I'd sat on my hands and wait to see what happened, I would have 0 deals. So you're better off having a small chance of having deals than 0 deals. So it's that time again. Please do me a massive favour. If you're finding use from these videos, hit that subscribe button. Really massage that like button, help them algorithms. It's a really tough platform to crack, and if you're enjoying this, please help me crack it by sharing it out to other people. As I said, my why is to live on my own terms, and my mission is to help as many people live on their own terms using property and financial education as a tool to do that. So help me by doing that, by sharing this message out to as many people as possible. And remember, if you don't evolve your ideas, you never live on your own terms. So evolve your ideas, live on your own terms, and have a fantastic day.